Good morning, everybody. Thanks for tuning into the trade setup. I'm afraid it's not a very good morning of trade if you are a bull per se, or if you are long or invested in equities, because it seems more like continuation of what happened on Friday. If not to the same extent, then at least that kind of weakness. So let's take stock of the global roundup first. The Dow dropped and then it closed about 500 odd points, close to 500 odd points to close at a new low for 2022. Oil tumbled below $80 to a barrel for the first time since early January. And while at the margin, it's good news for India. It's symptomatic of what's happening to the world, recession fears, which is bringing oil down as well. Energy as a complex has come off quite rapidly. At least oil prices have, even if coal and some of the others have not. The first North Korean ballistic missile since June has been fired, which has reignited tension, so to say. If Russia, Ukraine, and the atomic weapons threat was not enough, we have North Korea as a new issue, while China and Taiwan remains. This is truly a fairly complex geopolitical situation that we are in. And it all resulted in what the US markets or the European markets did on Friday, and the US markets will come up on your screen next, or for that matter, what futures are doing right now or Asia is doing today. So it's all looking very, very wobbly. Look at that, about 1.8% or 1.7% for the Dow, S&P, and the Nasdaq. The yields moved up 3.72% for the 10-year yield. The 2-year yield widened even further, and dollar index at 114. We were talking about what will happen at 111, 112. We now are at 113.75. It's not looking pleasant. SGX Nifty would be showing a downtick. We've corrected quite a bit, but there won't be any surprise with the kind of move that the Nifty will do today on account of course, what the Asian markets are doing as well. So SGX Nifty will come up on your screen next. This is, of course, as of 7:40, but it largely remains the same, these cues. And weakness for sure from a market's perspective, so not looking all that great. Keep that in mind. Now, what's the trade setup, therefore, for the day looking like? And that's the key question, right? The market direction will be led by global developments and FI flows. The rise in short-term yields may continue to trigger profit booking in banking names. Now, despite the fact that the street is consensus long on banks, and despite the fact that banks have the highest predictability of growth in FY23, arguably FY24, the near term looks slightly wobbly, the very short term, I mean. So bear that in mind. FIs, of course, have reduced the net longs in index futures by 36,000 contracts on Friday and by 54,000 contracts last week. And keep in mind now, with the kind of corrective move that we've seen, the YTD performance of the Nifty is negative. So the stance isn't the most optimistic. This week is important too, aside of course, what's happened on the global front, the US GDP growth numbers, etc. The outcome of the RBI MPC meeting would be crucial, and what does the Reserve Bank of India say and do and say, let me put it that way, would be of critical importance. So I think all eyes out for that. And of the last few days or weeks rather, when I'm speaking to some of the smartest minds in the investing fraternity, everybody's attention is also on the forex reserves. And what does the RBI have to say about the depleting rate of forex reserves? We are nowhere close to alarm bells, fairly comfortable. And I guess this is what you prepare forex reserves banking for, right? That when there is a crisis, you're able to utilize those reserves. But I think all eyes will be out on what Shaktikanta Das has to say about the forex reserves as well. They're down about 14% thus far. Could there be more in store? There will be more in store. How swift or how pacey would the decline in forex reserves be? And what are the implications thereof is something that the street would be wanting to hear from the MPC and the Reserve Bank of India governor. Arguably the most important data point from an Indian market's perspective this week. Well, so it's looking weak. What's therefore the stocks and the sectors to watch out for? I think I will watch out for Power Grid on a lower circuit on Friday's session raised many an eyebrow. There wasn't too many news per se, but Power just looked wobbly, down about 8%. Eventually OI up 15%, or Tata Power too, down about 3.5%, with OI up about 18%. Power Grid volumes were 4x the weekly average, with delivery volumes of nearly 56%. There was clearly delivery-based selling as well as short build-up out there on the power space in general and power grid in particular, though Tata Power, as I said, was not lost far behind. So do watch out for this one. Watch out for specific stocks, the likes of Embassy Office Parks REIT, wherein shareholder Blackstone will sell about 7.2 to 9.6% stake in the company for $400 million. ADIA is likely to pick up at least half of the stake as per Reuters, but clearly might put in some pressure on Embassy Office Parks. Not a very liquid stock, so keep in mind. ONGC and Oil India, I think, have a pressure of falling oil prices. So I have no surprise. I won't be surprised if there is more downtick today in general because of the way equities are as well. But what you have to watch out for is that natural gas prices will rise to record level this week because of the APM, or administers gas price mechanism, and therefore that is something that people should be watching out for. Watch out for metals, and while there is a talk of recovery and especially non-ferrous, how aluminum may stay well. I think Jeffries has a very interesting note on Hindalco today. So they are saying, and I'm quoting them, it's a hold with the target price of 380. They're saying Ball Corporation, which is the largest customer for Novelis, has lowered its 5-year volume CAGR outlook for North America to 2.2 to 4% from 4 to 6%, and for South America from 5.85 to 8% to a range of about 4 to 7%, citing historic inflation. Ball is cautioned that near-term volumes could be even lower given macro pressures and slowing can demand, which is the can in which, the Pepsi and Coke can, for example. The slowing can demand and falling aluminum prices are hurting Hindalco's outlook. So that is one note to watch. There is also a trading recommendation by ICICI Direct on Bandhan Bank. They expect weakness in the stock along with short blocks. They say that the stock has been witnessing delivery-based selling pressure. It's now closed. Let's move on from this plate to ICICI Direct on Bandhan Bank. So they are saying that they expect weakness in the stock along with short blocks. The stock has been witnessing delivery-based selling pressure. It's closed below its important support and highest put base of 280 that has Bandhan Bank, and the OI in the stock has remained stable over the past few days. So they believe that Bandhan Bank will see some selling pressure. So that is one name to watch out for from a trading recommendatory perspective. Remember, as it is, banks are looking slightly wobbly, and therefore no surprise if indeed Bandhan Bank were to have some bit of an issue. So that is one to watch out for as well. And I will watch out in some fashion for Indian hotels. It's not a day for creating long calls, but Indian hotels in an investor meet takeaway, they have rated a buy, Jeffries. The target price has been raised to 380. They've increased their FY23 to FY25 EBITDA estimates by 14 to 19%. Essentially, their call is that the run rate of occupancies and ARRs are comfortably strong. The company remains focused on balance sheet and free cash flow and building cash for adversities. And I think that should augur well for the stock. So they've raised the target price. And yes, in this festive season, hotels are blocked. I must tell you, hotels are blocked. So there is an issue. There is a, an issue of hotel room availability, but positive for hotel companies. So yeah, that's why there's constructive stance. Whether it's a right time to take that stance today or later on is anybody's guess. So net viewers, difficult times, at least for the near term. I read a lot of notes from Nomura, from Gavekal Research, all of which point towards a fairly wobbly outlook. So it's not a market that is running away. So the limited point I'm trying to make is, yes, let the SIPs continue. You never time the market. But if you have lump sum investments to make, don't be in a rush thinking the markets have fallen and therefore it's a great time to buy. I think a lot of smart macro investors are talking about some more pain ahead. Maybe, just maybe. It's a you. I don't know whether it's a right or a wrong call. I don't think anybody can tell that. But maybe it's prudent to not be a brave heart and try and fish at the first sign of trouble. This may not be the dip that people may want to buy as soon as possible. Just that much. Thanks so much for tuning in. Have a safe day ahead. And to everybody, happy Navratras. May the festive season in India bring some cheer for the markets.